Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone had a great weekend and that you are rested up for yet another week of, well, this one's going to be an interesting one. Those of you that are in the Simpler Futures options or the Sector Secrets Mastery rooms, I sent out the notes for this week. What are we expecting in this market? We do have one main hot zone coming up this week, and that is the FOMC. It's a two-parter. We've got the FOMC statement, which is actually going to be far more important than the actual rate decision, because the rate decision is, well, it's done. There's nothing here really to, I don't know why their graphic is so fuzzy here, but there's nothing really here to be any more concerned about other than that quarter point hike is coming. Any discussion about a half point hike or a hold for March is just garbage. Probably stuff they'll talk about on TV, but rest assured, we're seeing the quarter point hike. Where it does start to get more interesting is May. Are we going to see a quarter point hike in May? Absolutely. Put a check in that box. But the half point hike for May conversation is legit in terms of the way in which the target rate probabilities are being discounted at the moment. What does discount mean? It means what's being factored in, what's being baked into the cake, what is expected, right? So March, done deal. What, however, does that statement and more importantly, the press conference set us up for? And apparently I'm getting the spring sun coming in. There we go. See if I can balance that out. There we go. We're getting that spring sun coming in here into the room. All right. So that is what we have coming up for the week. All right. Wow, that is really bright. Okay. This is what daylight savings, this jump in time does. I can't believe we still do this. So that is what we want to remember, that the path to hikes between now and July is quarter, right? Quarter for March, quarter for May, quarter for June. But are we going to see that half for May? The statement's going to set us up for that. The press conference is going to set us up for that. And then all the hot zones for growth, inflation, jobs, those are going to be the further confirmation of what we'll see by the time we are in summer. All right. So with that being said, that is the main hot zone. That is the main macro. And then, within that, how are we going to position ourselves in this market? Well, one of the things I ask myself is, at the moment, what important levels have been crossed in this market? And I think one of the most important is one that we measure using volume. So this is a tool called the V-score. The V-score was something that I started. It wasn't an indicator back then. It was me, a calculator, and my journal and my notebook. And every day in the stocks that I was looking to buy, I would track what the Z score was for the VWAP. Like I said, we talked about this yesterday in the Sunday Notes live show. I don't ever want to not give you full transparency as far as what an indicator is. What is it, right? And then in terms of what a V score is, the Z score of the VWAP. So we're talking about a standard deviation of an indicator. We can pull a Z score on anything, by the way. What I wanted to find out, though, is at what point have we wandered too far away from the mean and we're going to snap back? That's what a Z score does for us. So we started crossing it in February, and we have now crossed and retested that V score 0, the mean. Again, look, we are starting to see all the signs that, from a perspective of technical trend, we're absolutely in a downtrend. And then from the perspective of where do we start to bottom out? That's what a question a lot of folks are asking me. Rog, are we near bottoming out? No, gang, we are not near bottoming out yet. Now, I'm also not going to be one of those chuckleheads who are going to put some crazy prediction out there either. That's clickbait, gang. You all know that. But what we want to remember is, what is the path of least resistance, right? Leave it to TV and whatever else on the internet It's going to talk about where we're going. How about we think like traders do? Traders think, well, not where are we going, but what is my pitch that allows me to engage the weakness that we are seeing, right? So the NASDAQ crossed that, was really crossing this mean on the V score since the end of January. But see how it was able to come back up? Now we've crossed it. And every time we get back to the mean, it's resistance. Back to the mean resistance, back to the mean resistance. So this NASDAQ is probably one of the best examples of where we want to short the rip. How low is low? I'm not going to guess at that. That's truly nonsense, right? What we do want to know is, can we short the rips? And that's the difference between the two conversations that'll be dueling in this market. Folks who want to put some sort of projection to the downside, which is just a guess, right? I guess when said with enough bravado, it can sound like they can predict the future. What we need to do as traders, though, is ask ourselves, is the 13 exponential shortable? Is the 21 exponential shortable? Do we have volume ledges as resistance that we can short into? Are there Darvis levels as resistance that we can short into? By the way, what about floors? If a certain floor gives, right? If we have a floor using a volume ledge or a Darvis or a major psychological level, is that shortable? It's all about which pitch is coming over the plate that we can potentially hit. Don't worry about where the market is going, right? Worry about when the market reaches a certain resistance level, can you short it? Or if it breaks a certain support level, can you short it? Does that make sense, gang? I hope that does, because we're in that sort of part of the narrative where now everyone's going to have these far out predictions. And look, we don't get paid for predictions as traders. You and I, we get paid about getting into the market, right? And taking advantage of a well-positioned entry. So in the case of the Dow, broken the V score, consistent red grab candles. If you don't have the grab candles, by the way, head on over to countdowntrader.com and download the grab and the wave. It's one indicator, right? The moving averages of the wave and the color-coded candles that I use called grab, green, red, and blue. Just an acronym for green, red, and blue. Green is bullish, red is bearish, blue is neutral. So go grab those. Grab the propulsion as well and put an 8x200 propulsion on your screen to see where we are in relation to the equator. And all of a sudden, you're going to find you've got your bearings in this market. That's what the shift has been for me. I knew what my bearings were, but I was sort of front running them a little bit, being a little impatient. So by mid-January, the market said, Rag, you can front run me all you want. But until that setup and that clarity is there, I'm I think we're back. That was very strange. I think we're back. Let me check with the Lorna bot. I think we're back. That was weird. My camera just decided to take a vacation. All right, cool. There we are. All right, so that was strange. Anyways, we're back. We're back. And so, keep in mind, what was I just telling y'all? Oh, yeah. So check out simplertrading.com/timeless replay. And I'll just kind of walk you through what happened before we got our bearings, how we got our bearings, and then what we've been doing from there forward. But as always, gang, this show is about your questions. Again, if you haven't checked out the notes for this week, what am I looking for? in the market. They are in the alert section. If I say room drive, I misspeak. They're in the alert section. The link is there. They pull up on the Simpler Trading mobile app, and we have the chart book edition this week. So you'll see here. Let me expand this a little bit. We have the chart book edition this week, where I've been walking through the different volume ledges, levels, the hot zones, what you need to be aware of in terms of sector relative outperformance. So we got a lot of goodness in this week's notes. Check them out. All right. So with that being said, let's get to it. First question. Hey there, Jamie. What are my thoughts on TSN? Sure. I, generally speaking, want to buy Tyson, Jamie. So what we have right now is actually let's switch on over to looking at, bear with me, the slow stochastic. I'm going to turn the slow stochastic on, I think. See if I can't get it to turn on. There we go. Let's do this. Because what we have here now is a market that was heading higher. Now it's choppy, right? Now it's a little bit of chop. So the question is, do we have enough clarity to call this an oversold market? Do we have enough clarity to call this an oversold market? We actually do. So this is how I teach you to trade chop, gang. Take a look. We got the Darvis 2.0 right there. We've got the, well, actually two of them, right? So let's keep an eye on this level. Oversold slow stochastic, Darvis level, neutral yellow trend. If you're ever at sort of a loss for, okay, Rog, what's the underlying market? Is it bullish? Is it bearish? Is it neutral? Use the free trade flags that I've given you all in this is in the room drive. It's a layout that we've put in the room drive. So use that that layout, and you'll get the two trade flags. One that shows you what's going on with momentum, bullish, bearish, neutral, and the one that shows you what's going on with the trend, bullish, bearish, neutral. This is a neutral trend, so overbought, oversold is valid. Remember, gang, if you don't know what the underlying market is, it's not enough to know the markets are bearish or bullish, right? We need to know not just up or down trend, but also when it's neutral, right? That's where a lot of traders get hurt, because they cannot differentiate between when the market is neutral versus a downtrend, or when the market is neutral versus an uptrend, right? So if you've got a set of indicators, but they neglect to tell you when the markets are neutral, it's incomplete. Go grab the trade flags and you're all set. It'll complement whatever you have right now. So I would say, Jamie, we're looking for potentially an oversold bounce, but let's also remember that it's pretty thin on volume here. You might want to wait for a minor low or an inside candle, but generally speaking, I would look for an oversold buy. All right. Great question. EWZ. Hey there, Tom. Look, EWZ, Brazil. This is a market that's above the 200 propulsion. So it's in the bullish side of the equator, if you will, bullish hemisphere. We've got consistent green grab candles. We've had an uptrend since the 2nd of February. Notice that I'm looking at the second day that we had green momentum, bullish, and green trend, bullish, right? So second day, so since February 2, we've had an uptrend here on the Brazil ETF. I love country ETFs. We talk about them quite a bit. It's one of the easiest ways to take advantage of the equity markets of other countries that we don't have necessarily access to via their exchange or a futures contract. DAX, FTSE, CAC 40, the Hang Seng, Australia's market, Brazil's market, France, right, which is the CAC 40, Italy. So we have access to these other countries via their ETFs. But remember, one of the things that we want to keep in mind is, especially since most of us are trading the options, as I do in the Sector Secrets Mastery, we're trading the options on these symbols, make sure they're liquid, because sometimes these country ETFs will have crickets and tumbleweeds for open interest and volume. But nonetheless, dip buys on EWZ. How's this chart look to me? That's what it looks like, Tom. Beautiful. So let's focus on some buy the dips. It is in line with the inflation, that grocery store commodity inflation that we're dealing with. It's absolutely in line with that beautiful chart. Beautiful chart. All right. What aggregation periods do I use for my volume profile? DC, I'll vary it, which is why I use the visible range volume profile. Right. I'll usually start with the year. So roughly just 2022. I'll go out 1 year back. So I might go anchor it to earnings. I could anchor it to specific days on the chart. So in many ways, DC, I'll sort of anchor, if you will, the volume profile in the same way that I would consider how I would anchor a volume weighted average price. So when I think about my submarket sonar anchors, what's submarket sonar? It's the volume that's associated with price. Price is on the surface. Volume is just below the surface. It's submarket, right? So I'll use some different look backs, very similar to the way that I would anchor VWAPs. All right. Hope that helps. Should we be shorting XLK? Mike, yes. Today, not necessarily, but generally speaking, yes. So if you've been following me in either the futures room, the options room, the sector secrets mastery room, pretty much wherever I have the ability to get on the mic, right? We've been talking about shorting tech. Tech is the preferred place for the best downtrending clarity. And again, gang, why? 10-year. Look at this 10-year. As long as the yields continue to go higher, which means the ZN and the IEF continue to go lower, look at this brand new high on yields, gang. You want to focus on which rips you can short. All right. So we've had a few rips that we can short. We've actually had 3 rips that we can short. Those days the market's higher and all of a sudden the optimism starts creeping its way in to an overall downtrending market, XLK, XLC, XLY, we want to short the rip. So I would put it on the radar for shorts. And on days that it's correcting, absolutely, Mike, that is what we are looking for. Bearish directional bias. All right. Hey there, Tim. Can I talk more about the notes? So, Tim, basically, these are notes that discuss what's going on this week in the market. What are the hot zones I've got going on? I've been sharing volume ledges. This particular set of notes is fairly chart heavy. We've got the hot zones discussed, what the target rate probabilities are going to be. We've got the relative performance of the sectors, all the things that you need to know in order to handle this week in the market, right? So can we basically, can we determine that on a Sunday? As I like to remind myself, winning the week starts on Sunday. And for me, Sunday night, right? Winning the week for me starts on a Sunday night, not on a Monday morning. So that's why I send these out. And that's why we have our new Sunday night show, right? The Sunday Notes Live show. By the way, these notes are available to members in the alert section. I alert them out. I alert them in the options room, futures room, and the mastery. So everyone gets the notes. My mastery folks, obviously we'll be using this as the base work, the framework of the foundation for what we'll be setting up as trades throughout the week. But I really wanted everybody, because this market is a little tricky, and I wanted everybody within our simpler community to benefit from, what we're seeing right now and what's been allowing me to really excel in this market at the moment. So again, if you want to see what we've been doing, head on over to simplertrading.com/timeless-replay. I put all my cards on the table, how difficult the year was until everything started dovetailing, macro trends, macroeconomic trends, and the technical trends, what tools I'm using, where to get the tools. You already know, many of you know, countdowntrader.com and the room drive where I've shared the different layouts. But that's what the notes are. It's just my effort to help our community, get y'all pointed in the right direction, get those hot zones, those trends, those relative outperformance discussions, where we're bullish, where we're bearish, how to even understand bullishness and bearishness with the free tools that I give you all, right? Grab candles, wave, the JT trend trade flags. And if you're in the mastery, you have the JT multi history. So I've really put all these tools out there for everyone to benefit from. So, Tim, that's what it is, sort of putting all those tools together. And then again, if you're with me in the mastery, this is what we build from to get the alerts that we do in there. So I hope that makes sense. Ted, Apple, this is the linchpin, my friend. Great Question. This is the linchpin. This was one of the charts in the notes, right? What do I want to keep an eye on? Gang, if Apple breaks to 200, it's literally been the number one weighted stock that will not break down. It's still above that equator. So, do I want to short Apple? Generally speaking, not yet. I'd rather short the XLK, where other stocks within the XLK are already showing the signs that we want for more downside. But if Apple rolls over, now when I say roll over, what do I mean? It would have to break down through the technical trend of the 200. Look out. Look out below. We're gonna start to see the trend to the downside get rolling. I don't know if traders, look, I don't know that Apple gets shorted heavily in front of a product release. But now that we know what it is, it's a whole lot easier for traders to start shorting this. So, as a general rule, before an Apple product release, do not short Apple. But once that product release is done, or if you can stand the volatility around, whatever iteration of the Mac Pro they've got, whatever new phones coming out, whatever reboot of the iPad. Look, I'm a huge Apple fan. I love my iDevices. I've got my iPad. I've got my iPhone. Believe me, I'm not a Apple hater. But the rhythm is don't short it aggressively in front of the release. You short into that release. So when we get that move into the release, that's what you short. Apple's going to break down now, gang. Technically, it's been right on the cusp. We've got that product release out of the way. Look out below. This is going to fare very well for our open QQQ shorts in the mastery. We've been shorting these a while, right? Remember, it's not about predicting where the markets are going to go. It's about predicting which pitch we can react to. So what else does that mean with an Apple breakdown? I think we're going to see a lot more heaviness in the spiders, SPY, in the QQQ. Just remember, XLK is where Apple is most heavy weighted in terms of that sector, that tide breakdown. So hope that helps. Neil, yeah, as far as the HPMRs, hit me up with that tomorrow, and I'll be more than happy to walk you all through the HPMR indicator and what it does and why I created it and how I created it. Okay. All right, gang. Have a great rest of your day. Sorry, I ran over a little bit. I will see you all in the options and the training room and for the showcase at 1:30 Eastern today. I'm going to go hop into the mastery room, say hi to our new members, and I will talk with you all tomorrow. Be good to each other, gang. Heads up for the FOMC on Wednesday.